JJ the CPA here. Hope you're doing well. So you probably heard 87,000 new IRS agents are getting ready to be hired by the Internal Revenue Service. 80 billion of additional funding has been allocated out of the recent Inflation Reduction Act. Of the 87,000 agents, of the 80 million. Did I say 80 million? I meant 80 billion with a B. Half of those agents, half of those dollars are going towards enforcement issues, meaning collections and audits. So who really should be worried about this? Well, really honestly, those that owe taxes now, those who haven't filed tax returns, that are delinquent, those that in essence owe payroll taxes, meaning employers that have withheld payroll tax but have not paid those taxes in. That would really be the low-hanging fruit, I think, for these new IRS agents that are going to be brought on for enforcement of collection activities. I think the other target that we're going to see are some of the normal ones, which is those that are self-employed filing a Schedule C, which is to say, stop filing Schedule C right now and become an S corporation. How? Check out my videos related to that. I'm going to put a link in the body. How and why, very short one, but stop filing Schedule C. And the reasoning for that is that it really is a big area that people are taking advantage of deductions incorrectly. So it's another area of low-hanging fruit. The other is that for businesses that are flow-throughs, which are S-corps and partnerships, I've been projecting this for a while, but I do believe those that have losses, what will be audited is not necessarily is the loss real, not is it a hobby loss. I think what they will be looking at is, do you have what's called tax basis or at-risk basis to allow the loss? So in the last 10 years, when I've been involved with IRS audits as a CPA practicing in the trenches with my clients, the IRS is really more interested in the higher level type audits. And we're seeing additional documentation that's being actually now required to be filed with the IRS, such as Form 7203 for S-corp owners to prove their basis. We know that for partnerships, they now have to report their basis starting back in 2020 on the cash basis of accounting. Now, here's all you need to know related to that is that if your business has losses, that's not what you should be, in essence, worried about. If it's a loss, it's a loss. What you want to be, for lack of a better word, worried about is ensuring that your basis is properly calculated. What is even basis? It means skin in the game. Money that you've put in that, in essence, would allow you to take the loss. Loans that you've taken in the business with partnerships that would be properly allocated as, in essence, at risk to you, that you have skin in the game. With S-corps, if you take loans out in the S-corp, those are not going to help you. So that, in my opinion, is the major aspects. Those that itemize their deductions may see that there's going to be some inquiries, but most likely that'll be related to ensuring that the full amount of mortgage interest that's deducted on Schedule A is correct with the limitations that are in play. Also, charitable contributions are accurate, which then just requires that you would have a receipt at the time that you file the return that says no goods or services were provided by that charity. So I think those are the major areas, but really what you need to know is that there's nothing to fear with the IRS in the sense that they're like a referee during any game. They're there to just call the play. And we have all the rules, the regulations, the notices, the forms, the instructions, even the audit guides that the IRS and those new agents will be following are all available at irs.gov. There is no secret handbook that the IRS is going by. They have the same rules that we're aware of. So what's key here is ensure you're doing everything properly, reporting all of your income, only deducting expenses that are ordinary and necessary related to your business under Code Section 162. If you have assets in your business and you're not a sole proprietor, meaning you're a C Corp, S Corp, or a partnership, ensure that those assets are actually titled in the business. What I would say for you is this: continuing as you do, but be sure that you have things buttoned down. For documentation and keeping it for past years, you want to keep anything for 7 years for related documents. So it's not just that they're going to audit necessarily going forward. I do feel that there's going to be audits reaching back, and there is normally a 6-year statute if they can make an adjustment that is in excess of 25% of your income. If it's not that big, then typically 3 years. All to say this: with 87,000 new agents coming into play, let's say more in the next 6 months to a year, they really could be reaching back 3 years, which would be back to probably 2019 and 2020. So hopefully you already had your ducks in a row. If you haven't filed, file. If you haven't paid in your taxes, get them paid, or set up a payment plan, which is all available at the IRS.gov, and ensure that you're working with a tax professional, those of you that are small business owners especially. All right, hey, thanks for tuning in. I'd love it if you'd subscribe, and then don't you ever forget, you've never met a CPA quite like me. All right, hey, have a great one. Appreciate you.